Crypto Hotep here with another investing video. We are on week 53 of the Family Portfolio and Dividends Tracker. Now, if you're unfamiliar with these videos, as always, please do yourself a favor, go to week number 1 in my channel, and that's where I go through this whole methodology of our investment journey that you're following here with my family. Basically, what we did was I created a small short list of stocks for my family to choose from, companies that they felt comfortable with and that they knew of, and blue chip type of companies as well as dividend stocks. They chose the companies that most resonated with them, the companies that they liked, the companies that they heard from, that they were familiar with. And then we proceeded to use M1 Finance as our broker of choice. Why? Well, with M1 Finance, you can create a big portfolio and then have sub-portfolios within it. So for us, the family portfolio has 5 sub-portfolios in it, and that's my whole entire family. And every week we go through this portfolio and go through account balances, we go through dividend activity, which is my personal favorite, and any news, market news, and any investment feelings or concerns that we may have, and just overall tracking that investment journey. These videos are for my own edification first and foremost, and for my families. So hopefully they find these videos whenever I'm dead and gone. Hopefully they're helpful for them as well. If you find them helpful, feel free to like, subscribe, comment, let me know what you think. But before we go to week 53, we have to go to week 52 and see where we were at. So last week we had a balance of $18.30 and 88 cents with a money weighted rate of return. Let's see what that money weighted rate of return was. It was low. Let's see. Let's scroll this back just a little bit. Okay, so $18.30 and 88 cents, money weighted rate of return of negative 10.07% with a market gain of a negative $190.11. Dividends earned of $5.62. Let's see what we have going on now and if the market has been kind to us this week. Okay, so this week we have a balance of $18.67 and 37 cents. We have a year-to-date money weighted rate of return of 7.99%, so a little bit better than last week. Market gain of a negative $153.62, so again, a little bit better than last week, still in the negative though. Dividends earned of $5.98, so we increased the balance of our dividends as well. Okay, now so let's see what's been going on since last week. Okay, so between this week and last week, we did have a couple of buys here, and we did have some, let's look here, we did have 4 buys here with our regular investing amount that we did go over, but we can go over it again. We did Costco, Meta, Tesla, and Target. So we touched base on that in week 52. And then since then, we did have several dividend payouts. So follow me here. We had a dividend overhaul, looks like, with O Realty, one of my favorite, of 8 cents. Moody's Corporation, 4 cents. The Hershey Company, which I really think is a very undervalued stock right now. I know they have some headwinds in the chocolate industry that are battling, but they still paying those dividends. 9 cents. CTAS, 2 cents. Duke Energy, 11 cents. Google, 5 cents. McDonald's, whopping $1.08. And then Duke Energy, it looks like they made a little adjustment here. It was 2 cents, and then they brought that back because my assumption is the system saw that they had already paid us out for Duke Energy, which is completely fine. McDonald's, a whopping $1.08. Now, if this is your first time watching these videos and you're saying Crypto Hotep, these are baby numbers. These are only pennies and cents, and wow, you're happy over $1. Look, you were 100% right. These are only pennies, nickels, and dimes. But these pennies and nickels and dimes are going through what we call that snowball effect and that compounding effect, where over time, those pennies, nickels, and dimes turns into quarters, and then those quarters turns into dollars. So the biggest premise about us investing into blue chip and dividend stocks are safety reasons. Not a lot of volatility, but there is some, especially with Tesla. and we'll get into that. But then also, when the markets are uncertain and you have a lot of volatility and you have a lot of dips, the dividends still pay out because you're invested into these very safe, long tenured companies. Those dividends typically will pay out. I don't want to say 100%, but I will say 9 times out of 10, those dividends are still being paid out. And if the dividends for your company are being cut or reduced, you may want to check that company and your holdings with that company, because it may be time to look somewhere else. But let's look at the portfolio here. So let's go bottom to top as always. But unfortunately, my wife's at the bottom again this week. So this week we have a balance of 157.51 for my wife. Money weighted rate of return of -7%, over 7%. Market gain of -$10.81. Dividends earned of 46 cents. So I will say this, it's been somewhat stagnant here year to date here, but let's look and see what we have going on here. So year to date, we're actually up on Celsius. Celsius, we're up a staggering 22%, almost 23% on Celsius. Why is that? Let's look into Celsius here. If we look at Celsius details currently, they have pushed price above the $31 mark. So if you remember when we were looking at Celsius and we were looking at their I believe it was the weekly chart, you can see the weekly chart here is a steadily incline of price up and to the right. Now, one of the key levels that we spoke about with Celsius is the $30 mark. I predicted that the $30 mark was a bottom, potentially, and that we needed to get above that $30 mark. And I think with Celsius, we're starting that trajectory up and to the right here. But this is a fantastic thing to see with Celsius. And I know my wife's going to be very, very happy about this. So weekly, they're up over 19%. And my wife currently is up over 22% year to date on Celsius. That is a dramatic turnaround for my wife, who last year Celsius was her Achilles heel for her portfolio. But again, these stocks, we're not day trading these stocks or even swing trading these stocks. We're holding these stocks for the long term. But let's continue. Pepsi, we're down over 1%, 1.5%. Google, we're down over 16% with Google, but I think Google is very undervalued right now. Very good chance to get into it. Not financial advice at all. Tesla, we are down over 4. That's not a mistake. We're down over 44, almost 45% with Tesla, continuing the bleed out. I can tell you right now, I'm not worried about Tesla at all. Let's go to our middle stocks. Our middle stocks down negative 9.48%, market gain of negative $18.52, and 60-cent dividends earned. What do we have going on with our middle? So our middle, still the same players are doing well, which in the past 2 to 3 weeks have been Starbucks up over 8%. I believe we were up over 7% last week. So steadily going up with Starbucks, and then Nintendo holding steady at a gain of over 20% year to date for Nintendo. Tesla following suit, down over 44, almost 45%. Target, again, a sleeper right here. Target down over 24%. Amazon, you never want to bet against Amazon. Never, ever. Down over 12%, which I think is at a very good discount, so we're steadily buying. And then Costco down over 2.5%. You're not beating Costco at all, ever. Let's go to our youngest stock. Our youngest stocks balance 231.42. Money weighted rate of return year to date of 4.66% negative 4.66%. Market gain of a negative $10.55, with dividends earned of 33 cents. Following suit with Nintendo from our middle, up over 20% on Nintendo. Following our middle, Starbucks, up over 8.5% on Starbucks year to date. But again, we have tech deals. Tech stocks are on discount. Apple down over 13% year to date on Apple. And then Tesla again falling suit, down over 45% on Tesla. And I'll just pause here for a second with Tesla and why I'm not worried about it. Again, the FUD is going on with Tesla currently. There's a lot of, I don't even know if you call them like activists protesting against Tesla, a lot of people damaging Tesla's owners' vehicles, and just a lot of FUD news with Tesla. Same thing happened last year around the springtime, and we were still buying Tesla for our youngest because none of us had Tesla. And eventually, price came around to Tesla's true value. I would not bet against Elon Musk and Tesla currently at all. Usually when the FUD is happening with Tesla, Tesla handles it very well in terms of stock price. It's just a matter of time and when that price is going to revert. So with that being said, we'll go into my stocks. My stocks, I am down 1.25%, over 1.25%. Market gain of negative $11.74. Dividends earned of $3.22. So again, very similar to last week. Technology is bleeding out. My technology sector, I'm down over 13% in technology. Industrials and energy, though, however, I'm up 8%. Again, if you've been following these videos, you know this is the sector that I predicted with the new administration that came in, that this would be the sector that'd be carrying my portfolio, and it is. So I was correct about that assumption. Our finance sector up over 0.5%. Consumers and staples, we are down. Usually consumers and staples is my little engine that could sector. It's always very consistent, but we're down over 3.25% for our consumers and staples. Why? Well, inflation, the talks of inflation and the tariffs are affecting prices on regular goods, which most of my consumer and staples companies, it affects them, right? So we have the Procter and Gamble's, we have the Walmart, we have the Costco's, we have the Targets, all of these companies that rely on shipping and containers and those type of things. We can see talks of inflation, talks of recession, talks of these tariffs. They are affecting these prices dramatically. But again, this is the market, and this is what happens typically with the market. So, I always say if you follow the news and you wait on the news to be good for investing, you'll never invest. There's always going to be something going on in the world which will stop you from investing. You have to put your money into the market, and you have to be okay with getting into the red at times. So you just have to have faith in those companies, and that's why we invest our money into quality companies. So when we take these dips, when we go on these roller coasters, we have nothing really to worry about because we believe in that company. Restaurants and food, we are up over 6%, which is good to see. Pharmaceutical, up over 7%. This was a definite V recovery right here. Real estate down over 1%. Not really worried about this. Looks like public storage is flat here. And then again, Realty, which is carrying my portfolio, up over 7%, down over 12% on Federal Realty though. But again, Realty was the Achilles heel in my portfolio last year, and I was still buying Realty even though it consistently traded in the red and was dipping. Again, you invest in a good company, especially this dividend generating company, and look what happens when the price returns to where it is. And last but not least, let's go to our oldest. Our oldest with the biggest balance here is $646.36. Money weighted rate of return year to date of a negative 15.18%, negative $102 market gain. Dividends earned though over $1.37. I do like to see that for our oldest. Apple again following the trend, down over 14.5%. McDonald's up over 6.5%. Costco down 4%, and then there we go again. Tesla down over 40% on Tesla. But again, as I've said before, no need to worry here. This is where having money on the side actually helps, is during these times here. But with that being said, guys, we're ending the call with, or ending the video with a balance of $18.67.37 with that family portfolio. If this video is helpful, feel free to like, subscribe, comment, let me know what you think. But as always, thank you and happy investing.